Dow futures slumped over 500 points, signaling a rough start to the week for equities. Diesel fuel and DEF shortages causing crisis and panic threats to our food supply. China's tricks of the trade that America can learn from to protect U.S. citizens' wallets. And the U.S. home sales prices see a decline. But what does that mean for home buyers searching the market? These updates and more. But first, I want to ask you a question. If you had $1,000 to invest right now, what would you do with it? Comment and let me know. After a volatile week, Wall Street is bracing for more losses as U.S. stock index futures fell sharply. The Dow Jones and S&P 500 each slipped 0.2% last week, and the Nasdaq fell 1.5%. Bitcoin slipped below 35,000 and is now down almost 50% from its all-time high. This latest correction to BTC shows crypto assets growing more in line with stocks and their movements in the market. Bitcoin, the world's most popular cryptocurrency asset, extended its slump into the weekend, falling below 35,000 after a volatile week for equities and other assets. This news coming after members of Congress just recently wrote a letter to the EPA last month claiming that Bitcoin production is poisoning U.S. communities. Do you have any investments in Bitcoin and other cryptocurrencies like Ethereum, Shiba Inu, Dogecoin, or XRP, Ripple? Comment below and let me know if you think the future of the cryptocurrency market is a safe bet for investing. And reports say it's not just Russia, as China is also contributing to higher inflation worldwide. The food insecurity crisis and higher energy prices are products of the conflicts between Russia and Ukraine, but during this war, China has been able to fly under the radar until now. Analysts have singled out restrictions and tariffs imposed by China in two major commodities, fertilizer and pork. The Asian giant is one of the world's biggest producers of steel and has also slapped on restrictions on these materials as well. These moves made by China have led to higher prices for everyone else, especially you and I here in America. Prices of fertilizer in China started rising last year as a result of strong demand and higher energy prices. But the war between Russia and Ukraine has since pushed the price of fertilizer even higher. Last July, authorities ordered major Chinese firms to suspend exporting fertilizer to ensure the supply of the domestic chemical fertilizer market. As the prices started to rise, Chinese authorities started mandating additional scrutiny on exports. With more Chinese-based fertilizer product kept at home due to a decline in exports, Chinese fertilizer prices leveled off and have since even started to fall. Now, this is the opposite of what has been seen around the world in other countries, where fertilizer prices continue to soar, more than doubling in price from just a year ago. The Russia-Ukraine war is already threatening the global food supply. Considered a breadbasket, Ukraine is a major exporter of crops such as wheat, barley, corn, and sunflower oil. This perfect storm couldn't come at a worse time because where there is less fertilizer, there is less food grown. And less food grown can result in food insecurities, food shortages, empty shelves at grocery stores and markets, and ultimately poverty. If you have a farm or homestead and are able to produce your own food for you and your family, you are definitely in a better position than most of Americans who must rely on overpriced corporations like Walmart, Costco, and Sprouts to buy their food, fruits, vegetables, and other daily necessities. And get them while you can, because diesel prices are surging across the country, and this means everything you need to buy, including food, is going to cost more. On top of the rapid inflation and increased interest rates imposed by the Fed, thanks Jerome, gasoline prices are increasing almost daily, and this is putting a squeeze on wallets and pocketbooks of all Americans. Today's truck stop retail diesel prices hit a new record of almost $6 a gallon, increasing the overall cost for an owner-operator whose truck usually only gets about 6.5 miles per gallon. Diesel is the fuel that drives the economy and leaves major industries vulnerable to cost shock. Without diesel fuel, the U.S. economy would collapse in a matter of days. Our supply chains would completely dry up almost overnight. And no, Elon Musk is not going to save us here. If you recall, Tesla announced the Semi in 2017, and Musk projected that over 100,000 units would be produced by 2022. Today, there are less than 20, and they are mostly just prototypes. Farmers use diesel to power most of their machinery, and trains also depend on diesel to transport products across the country. But where there is smoke, there is fire. The pilot Flying J diesel fuel gas station and Flying J travel center truck stops fear the rail crisis will cut U.S. DEF biofuel supply as a result of Union Pacific's push to cut train shipment emissions and creating a DEF or diesel exhaust fluid and ethanol shortage in the process. The Pilot Corporation fears that Union Pacific's restrictions will prevent Pilot from keeping many markets adequately supplied with DEF, likely causing shortages that will sideline trucks and reduce trucking capacity. Our neighbors to the north, Canada's railway giants CN and CP, are testing battery and hydrogen-powered locomotives in a move toward electric, zero-emissions freight rail. Rail companies are now facing pressure from both governments and shareholders to reduce emissions, especially now that the price on carbon is expected to increase, and with it, the price of diesel that powers Canadian trains. They know they have to cut costs before it starts hitting their bottom line. And the latest update from the U.S. housing market shows signs of a shift, where the number of home sellers who dropped their asking price shot up a 6-month high of 15%. But this doesn't mean home buyers are going to see much relief as the U.S. housing market continues to see record home prices. Housing supply continues to lag far behind demand as buyers continue to outnumber sellers. The median U.S. home sale price recorded its largest increase yet at $396,125, which is up 17% from a year ago, driving the monthly mortgage payment up to a record-setting $2,400 a month, based on the new current 5.27% mortgage rate. That's up 42% in just 12 months, when mortgage rates were below 3%. Do you think we're in a housing market bubble? Do you think the housing market crisis is at risk of crashing? Wall Street investor and co-founder and chief investment strategist of the Boston-based asset management firm Grantham, Mayo, and Van Uterloo, or GMO, Jeremy Grantham says we are in the fifth great bubble of the modern era and warns the economy won't skate through a housing crisis. Labeling this a super bubble, Grantham expects to see the S&P 500 to be cut in half as an era of exceedingly risky investor behavior begins to fade away. Grantham says the U.S. economy is unlikely to survive a housing market crisis. Grantham is convinced that both stocks and the housing market have been lifted to unsustainable levels as a direct result of loose monetary policies from the Federal Reserve. Now, with interest rates for a 30-year fixed rate mortgage rising to 5.27% this week, he sees that point coming closer than ever before. And Americans can expect to see big hikes in insurance premiums very, very soon, thanks to the Democrats allowing pandemic aid to come to an end. Dems never managed to resurrect parts of their social spending and climate package, which stalled out in the Senate. The Biden stimulus law beefed up subsidies to cut monthly premium costs and make private individual health insurance plans more affordable under the Affordable Care Act. Democrats intended to extend the program through the Build Back Better bill, but federal unemployment aid expired last year and Affordable Care Act subsidies may expire this year. Premium shock could set in for many Americans with price increases of $800 more per year for coverage. These new higher inflated healthcare insurance premium renewal costs could set in just before midterm elections, with the potential of 3 million people losing healthcare coverage without the bulked up federal aid, and those who can still afford to keep healthcare coverage may be forced to select cheaper plans carrying greater risk, as the cheaper plan deductibles are sometimes 30 times higher, a jump from $200 to over $7,000 in some cases. Those at greatest risk are typically older folks who are middle income or lower working class, poor elderly on fixed income.